Hi, fighters. How you doing? Travis Witherspoon here from Carter Capital, helping you fight for your financial freedom throughout the Forex market through education and automation. Today is 10/27. It is Sunday. It is 6:15 a.m. I am bright-eyed and ready to go, talking about some of the things that are actually going in the market based off of what we ended up talking about yesterday. Um, if you're not a part of the group and are not a part of any of the things that we have going on, whether if it's Trading View, whether if it's the online academy or anything else like that, please take the time to make sure that you end up taking a look at the website and everything else, in which I'm going to send a little bit later on. Before we actually end up getting started, I want to go ahead and go through the disclaimer. Basically saying that all of these decisions and all of the things that I end up talking about is not educational. It's not financial advice. It's just nothing but education. It's being able to teach you how to be able to take a look at the market, plan out the market, and then after that, make your own decision. So I wanted to make sure I end up getting that out. Also, while we're going through this, I want to make sure that you end up taking the time to end up liking, sharing, and subscribing to all of the stuff that we have going on inside of the market. CarterCalCapital.com, on Facebook, on Trading View, on Instagram, on everything else. It's Carter Capital. All you have to do is just click on that, and it's basically you're right in. I'm trying to find that slide in which it has all of that information, and I have so many slides that I'm not able to find it. So once I do find it, I basically end up sharing that information over with you. I probably might share it at the end, just to make sure that everybody has all that information. But oh, there it is. Social media links. Okay, so once again, Facebook is Carter Cal Cap. Twitter is Carter Cal Capital, and Trading View is Carter Cal Cap. I'm mostly on Instagram and everything else, and just being able to send that off, and on Trading View. We actually end up hosting classes every Tuesday and every Thursday, just free webinars for people to be able to be interested. And if you are interested, you can be able to go through personal education and everything else with the packages that we have. So without further ado, I want to go ahead and just jump into the charts, talk about where we were last week, talk about where we are right now, and go through a few other things like that. So the first chart that we're going to focus in on, because remember, within this version, we actually only look at U.S. based pairs, but I'm gonna end up giving a freebie out today, and I want to take a look at the Aussie yen and the Swiss franc, which were members only type of moves. But I want to make sure that I end up showing that to you as well, because we actually end up getting a lot of good movement based off of them. So looking at the Euro US, this is the first chart that we end up going through. First one, let's go ahead and talk about what's going on with the market in general. From a monthly standpoint, the market has hit the monthly D. Once it ended up hitting the monthly D, which was at 1.0918, the market ended up rejecting and going back up from there. Now, I do expect what's going to end up happening more than likely is that the bulls are going to end up pushing the market up at least up to the 382. The only reason why I think it's going to push up to the 382 is because now a monthly target has been hit. You can tell from that monthly target, as soon as it ends up hitting, you end up getting this huge bearish engulfing candle, and this candlestick won't be closed until the end of the week, this is the last week of the month. So going into that, we go into the daily. Overall, the mindset would probably end up saying, hey, a monthly target has been hit. More than likely, you probably should start looking for bullish movement. Now, if there is bearish movement and you can be able to get it, it will be short-term moves. And just going from that bearish movement for short-term moves, I end up looking at a sell trade that was presented to us because of extreme overbought and oversold conditions. Based off of that extreme overbought and oversold conditions, it basically ended up rising up almost to that 1.12 area, in which it's been conflicting from right here, and right there. So it was a pivot, and it was basically right around a 61.8 retracement on the Fibonacci's. So from there, what I did expect was that the market was going to end up basically having a counter trend line break and then pushing back down. It broke from the inner trend line and it started moving toward the outer trend line. Now, a couple things that may end up happening is this. If it does break this outer trend line, in which it's reacting to it right now, If it does break that, then I believe it's going to fall a little bit more, and then possibly try to go after 107.70 before it starts to push back up. Overall, the long-term target, there's a long-term target at 1.05, which I do believe is a target that probably will be attainable as long as there's no catalyst that's going to end up being towards the U.S. dollars not favor with impeachment talks and everything else like that. I think there's been it's been like it's more in consolidation. There has been moves to go up, but the moves have basically been rejected and went back to the overall mean or whatever the move was. So what we ended up doing on last Sunday was that we was looking for a counter trend line break. Once that counter trend line break ended up happening, we actually ended up taking a sell. From that sell and ended up going down, I actually ended up getting up 71 pips from that move, just to show you that just to show you where I'm at for the overall move and be very truthful about that move. Here is the results from there. If you look at it, I actually ended up taking that trade twice. I ended up getting up 71 pips on one. And I'm up on my automations a little bit more, in which if you looked at the last video, I kind of gave you a sneak peek about the automations and everything else like that. So right now, at this point, what I'm looking for is this. It has hit it's close to the 382, just for a rejection move. If we're looking at, if we're saying that it's going to end up being bearish the whole time and no U.S. catalyst that's going to end up being negative, it's going to end up turning the market around, the target would be 107.70, which is about another, from here, which is about another 320 pips of actual downside movement. Two things will have to happen for this. The European Union is going to have some negative news, and it's going to have continual negative news, and the U.S. dollar is going to have to get stronger with good news and good figures and everything else going into the end of the month. Now, I believe this possibly could happen at the end of the month. We end up getting some more economic news that will possibly may end up hindering it. The impeachment talks will possibly may hinder it from being able to move down there. So I'm going to end up being very tight with the way that I end up trading this. Remember, my overall target is right here. Now, if it gets to the B low and then after that starts to turn around, which is at 109.30, then I possibly may end up looking at getting out of it somewhere early, and then after that, just kind of letting it play out. But for right now, I'm just going to remain patient and then stay in the trade, especially if my automations are staying in the trade. I'm just going to stay in the trade from there. So if you're not in, let's talk about what you could do. Right now, it was in a oversold zone. Right now, it's in a zone to where it's basically in the middle. So it's a no-win, no-lose type of situation. If you want to get into this as a sell trade, and if you're hell-bent on getting into this as a sell trade, what you have to do is go to the 2-hour chart, which is the lower time frame, and we're looking for a push up. If you notice, we've had a higher high, higher low, higher high, higher low, higher high, higher low. I mean, lower low, lower low, lower low. So we're looking at a move that's going to end up going up. I expect that it's going to end up happening on during the Sunday market, during the Tokyo session. Let's say if it goes down and then after that it starts to reject up, put a counter trend line up, and then after that see if it'll break. If it does break, kind of like what happened right here, if it does break, then look to take your sell, place your stop above the swing high, and then after that see if your risk reward is above 1 to 2, then take the trade. If not, then stay out of it and move on to the next one. But that's the Euro US dollar. Moving on to the next one, and talk about the US yen. With the US yen, I've really stayed out of it. And if I do get into any type of trades with the US yen, it has always been a quick scalp. I'm not really trying to get into not trying to get into something that might end up put me into a bad position, because based off of the trade wars with the US dollar and the Japanese yen, it has been somewhat stagnant, and it wasn't necessarily given a clear direction. So we look at the monthly chart. These Fibonacci's are from shorter time frames, so disregard that. what has happened is that it actually ended up hitting our target, which was at 104.77. And typically, once it goes off the target, it starts to retrace back up. So the Bears were in control for a little bit now. The Bulls have basically ended up turning that into a retracement. You can tell down from the stochastic that the Bulls are basically in control from the stochastic level. But you look at from the momentum level, you'll see that the Bears are in control. So right now, it's really at a point of stagnation. Right now, on a monthly chart, it's saying that the Bulls are in control, but right now, there's really no direction. There's no overbought or oversold zone. If we go into the actual chart for the daily, once again, here's that target that was hit. It's starting to reject back up, and it's going up to the 382. The 382 has been hit. What we end up saying that, what we end up saying before, that we're looking to be able to sell, but that was at 10.6, in which it basically ended up hitting that target before, so I can get rid of that. And earlier this week, it actually ended up going into a oversold zone based off of that news. But once again, there really wasn't no actual movement down. You want to talk about just the overall day and actual stagnation between both pairs because of the trade war. This was only between 4 days, 57 pips. Now, this has been a fast mover plenty of times before. But because of that news, you could tell that it's just hovering around that level. Now, here's some calls to be able to say that it's going to keep on going up. Typically, what you end up noticing is my blue lines are set up at pivot levels, which means that this is a level that it has been hitting over and over again. Now, and often they're often around round numbers. Round numbers are psychological levels. I actually end up getting into that in my book, the precision entry point strategy, which I end up talking about why round numbers are very important. But with that being said, it was oversold. From that oversold position, it ended up going down. Right now, you're looking at it, it's hovering around and above that 108.250 level. I do expect that when the market ends up going down and hitting towards the buy zone, the Bulls are going to end up jumping back in because the monthly movement since then has been more bullish. So if I was to take a position, the position that I would take would be more towards the bullish upside. What I would end up doing is this. I would take a look at the Fibonacci's and see where it's at that point in level, and bring this up right here and see where it's at. Right now, if you looked at it, it retraced down to the 5.0 level, which means that it's going to end up going up to the 1.618, which is the -5 level on Trading View. So I expect that it's going to end up hitting the 110 level, and that actually is a pretty good figure. The reason why I say it's a pretty good figure is because it matches up with this previous A and this previous low, which it's done started off at. So if you have any type of move you want to go after, I would say let's go to a lower time frame just to be able to get an entry. We'll go to the sorry about that. Get rid of that. We go to the 2-hour chart and take a look at the 2-hour chart and get an example about how to be able to get in. So I would want it to be able to go down more first. So let's say I would want the chart to be able to go down, see if it can retest on 108.25 again, which is 50 pips towards the downside. I do believe that retail traders can possibly be able to take that down and be able to push that down a little bit more. If that does not happen, then I would look for just a bullish candlestick formation to be able to get in. But you could tell it's kind of range bound within this level right here. Of this is your highest high, that is your low, and I place a low right around right here. So if it breaks over this high right here, in which I'm going to place in a small little green line, if it breaks over that high right there, I will be in more calls to say, if it didn't go down and it break towards that high, if there's still a good risk reward factor, then I would take it. From here to here, we're talking about, from that point, we're talking about 300. No, that's not 309 pips. Where's the figure at? It was 107. hold on. Let me go back to the daily chart real quick and make sure I had this right. On the daily chart, 110.44. 110.44. So 110.44 is right around here. Let's make another blue line right here. 110.43. So if it gets to that point and we're going after it, the target will end up being right around 100 and basically 150 pips. If that happens, I have to place my stop right below 108.25 because that has been the swing low. So I'll probably put it at 108.20, 108.11. So you're talking about 75 to be able to go out to 150. That's a 1 to 2. Not the greatest risk reward ratio, but it is a doable ratio. So I would say if it goes in that level and you want to buy up to that level, then that would be the move from that target. Me personally, I probably wouldn't take that just because of what's going on. I don't know what's going on with the trade wars, and I don't want to. If the euro, if the U.S. dollar and the Japanese yen have been basically weak together, and last week was a rebound week, then you expect that this week coming up, they're probably going to end up being weak again, which means that it's going to end up being stagnation again. So you're probably staying the trade for a longer time than what you actually want to. So me personally, I say out, but that would be the two levels that I would personally look at if I was going to end up taking a trade from there. All right, so moving on to the next one. We end up talking about the Euro USD. Let's talk about the US CAD, and let's talk about the US Canadian dollar. US Canadian dollar, another pair that I've actually ended up staying out of. But I do want to go about and talk about where it is right now, because maybe there might be a move upcoming this week and we might be able to get into it. From a monthly standpoint, this talking about what ended up happening in early September to where it is now, and it's finally done made that move down to the downside. Remember, we ended up saying that this market was basically going up on this uptrend line. As soon as they end up breaking that uptrend line, then more than likely we're going to end up being bearish and moving towards the outer trend line. So from a bearish standpoint, what has happened typically when you end up getting a bearish engulfing candlestick or anything like that, you will end up seeing a test. All right, to give you a perfect example, you end up having this bullish engulfing bullish candlestick movement. You end up having this bearish engulfing candlestick for 4 straight months. It ended up testing this candlestick, and if it didn't break, then that meant that the bears end up staying in control. Now the same thing ended up happening. Bearish move right here. Bulls tried to push it back up. They wasn't able to push it back up. Now you end up getting this bearish move to the downside. Now, here's the most important factor in this number. You look at 1.33. 1.33 has been a huge pivot number for a long time. You see that price has been hovering around this number for a while, and it has rejected off of that number or has turned it into support. So for me, that was a huge number to say, if you're able to get into it at that point, then get into it and then sell down to whatever the target that you were going into. Now, a few weeks ago, I was able to get into a trade like this, but since then, I haven't found an opportunity. What it has done is it's broken down to 3.0 from that standpoint. It's been down 250 pips from that actual move. Now, let me show you what that looks like on the daily chart. It goes at 1.33 move. I was trying to see if I can catch it a little bit higher. I didn't. I had to get in right around 1.33, and I think my automation system ended up catching me in that one. And then after that, it has moved down to this downtrend line. Now, what's going to end up happening is this. Right now, if you look at the daily is in an extreme oversold position. Meaning that what the market is probably going to end up doing is that it's probably going to end up pushing down just a little bit more. And then after that, start to retest this 1.31 level, at least before it starts to go up. So that means it's going to test it from the backside. All right. So we'll expect that the market is going to end up going down. Once it ends up going down, then after that, it's going to end up going right back up and then retesting this level. So early this week, I expect that there's going to be a U-turn. That U-turn is going to end up being some people are going to end up buying that just because it's in an oversold or overbought condition. I would not buy that at all. The only reason why I wouldn't buy that is because one, the U.S. ended up having that huge big move last week on other pairs, and we're trying to see how strong it's going to end up being. Two, because this bearish move has been so strong, people that are looking for any type of bearish move are going to end up kicking it down, which means that the momentum is going to be towards the downside. So there's minimal upside movement. There's minimum upside gain on this one compared to the downside movement, if that makes sense to anybody that's out here listening. But what I do expect that it's going to end up going down, it's going to reject, and it's going to retest up to 1.31. Now, the overall target from here, since it end up hitting this 8.6 level, will end up being the 236 level, which will end up being 1.29 figure. All right, so the target is at 1.29 figure. So the question is, how can we be able to get the most out of this 200, and where should we place our stop at to make sure that we're okay? So if the market ends up dropping down to this point and ends up going up to 1.31, I would say place your entry at 1.31. You want to target 1.29 and be able to get out in that level. Your stop loss will have to be above one of these swing highs. If we want to be truthful about it, the swing high that I'll probably end up going to is the 1.32 level, which will make it right around 100 pips to go after. We're saying 100 pips to really go after right around 200 pips. So once again, that's a 2-to-1. I wouldn't be any more aggressive than that. But once again, we're not in a position to be able to take a sell trade as of yet. We'll have to, if we're going to take this trade, I will wait until it ends up getting higher, or at least wait until it ends up getting towards this level at 60. Because if you notice, just based off of this indicator, it has been moving. And it has been hitting right around this level before it has made any type of upside or downside movement. So I would look at the indicator and say, if it gets past 60, then there goes a level to be able to sell or to buy. So that is the Euro US. It's something that we just have to wait on. Let me go ahead and write this up so I can make sure that I can have this for everyone. My text is going to be this. Simply put, looking for a sale, waiting for a high price, watch the indicator to see when looking for a high price, watch the indicator to see, watch the indicator, okay, watch the indicator around the 60 level. So got that in there. Place that in. So what that means, basically, I'm looking at it to be able to go up towards at least the 60 level. If there's a crossover at the 60 level, then it's been proven that it has been pushing down from there. And we'll have a price from there. So I'm looking for a high price. I expect for the market to go up, and then after that, push back down from there. So next one, U.S. Swiss franc. And so if we're looking at the U.S. Swiss franc now, once again, another pair that I did not make a move on this week or last week. Now let's talk about what happened. Let's talk about what happened from a monthly standpoint, and then after that, we can talk about the direction in which I think it's going to end up moving, and we can end up going from there. Right now, you look at it just from an overall stochastic. The stochastic is basically in middle ground, so that means that either the bulls or the bears can end up gaining. But what was happening was that there was a rising wedge that ended up being broke down from the downside, what meant that the bears ended up taking control. So the Swiss franc was in control of the U.S. dollar. All right. From there, just like what ended up happening with the Canadian dollar, there has been a test of this move, a test of this high that has been moving up for the last few months. Now, overall, I do expect that it's going to end up being bearish, just based off of that move. I do expect that the bearish move is going to go down to 95.50. The reason why I think that it's going to go down to 95.50 is because of daily targets. Now, in order to be able to get the best price, you have to look at the daily chart and see where the market is right now to kind of figure out where it's going. If you've looked at it and if kind of noticed, with the bulls basically end up breaking it down to this level. What has started to form is more of a king's crown compared to anything else, and it's kind of looking like you can call it a head and shoulders. I call it a king's crown. I believe that I think there's more move to the upside just based off of looking at this and just off of the daily. So what has happened was market ended up moving down from that move. That was the big move that ended up pushing down from that triangle, right? It ended up hitting that level. It ended up breaking past, and then after that ended up going below. From there, the market ended up rejecting back up, and then after that breaking down again from this level, kind of matching up with this C. But the second level was a little bit lower. So from there, what I end up doing is this. And this is the reason why I think it kind of probably ended up moving more towards the upside than it would the downside, and at least testing a little bit more this high. Remember, we end up having that huge candlestick that basically ended up showing on a monthly that the market was going to end up moving down. That the market ended up moving down from these two levels. So these 2 months, basically market ended up moving down almost easily almost 500 to 600 pips, right? All right, 500 pips. So on the side of that 500 pips, it's being pushed up and it's been testing from that potential point. Does not mean that it's going to end up breaking down towards the bearish move, but I do think that it still has more room toward the upside to be able to move. Now, my target, if it's going to keep on pushing up, it's going to end up attacking that 1.012 level. It's already at parity. It ended up being around parity, which means that $1 will end up matching up with one Swiss franc dollar. But I do think that it can end up pushing up to at least the 1.012 area first before even making a decision, because there's no pivot levels, or there's no level right here in the middle that ends up showing that there's any type of resistance. So from a bullish standpoint, let's look at it from a bullish area first before we end up thinking about doing anything first. So going based off of this move, once again, market ended up going down. Market ended up pushing right here. It ended up hitting a 1.618, which was a D extension. Sorry about all these lines. I need to erase some of them. I don't know why all of them are here, but most of them are pivots. So when the market ended up pushing back up and ended up rejecting back down, and now it's starting to push back up. And you notice it ended up rejecting off another pivot level, which was at 98.50. All right, from there, what I did expect to happen, and I actually ended up writing this down: 10.6 areas to buy, 9,900, 98.50. Market basically ended up hitting at 98.50. I didn't pay attention to my own information, because as soon as they ended up hitting 98.50, they ended up exploding back off. Now, let me explain the reason why I ended up saying 98.50. The reason why I ended up saying 98.50 was because that was a 5.0 level in which the market ended up going back up, and then after that ended up hitting this actual position down here. That orange line, I get it now. The orange line was a 618 level, which was at 98.14. Where I thought that the market was going to end up moving down if it moved down a little bit deeper. Now, even with that being said, green on this level goes to green up top, which means that the target is going to end up being at 102 figure, which matches up with being able to test this actual high. So what I do expect is this. I do expect that the market is going to at least push up to 1.012 at least. It may not get all the way up to this figure right here and be able to test that, and that will actually make it a full head and shoulders if it does do that. I mean, a full king's crown if it does do that. If it doesn't, I do expect that it's going to at least go to the 1.012 level. So let's talk about how much pips is there to be able to go after. Just based off of that, there's 175 pips right now. Now, with that being said, since we're so late in being able to get in, how could you get into this? One, you can go under the swing low, which is 97 pips away, and basically go a few more pips after that. Let's say 105 for 175. Is that a great ratio? To me, no, it's not. Yeah. So the next thing would be, can we go to the 2 hour and see if we can find a lower type of entry on the 2 hour? That lower type of entry basically ties right up in with that. Actual movement. Now we can say possibly put it down at 9,900. That 9,900 is another level as well as just a figure of where it's going to end up going. So if we say 9,500, then we can go and let's place it right up under this swing low, which is 98.95. We'll go. It'll be basically 50 pips. So 98, basically 98.90 as the stop. So we'll say stop is at 98.90. Stop 98.90. Now I'm going to say 2 hour stop, just to make sure that everybody fully understands that. And the target will end up being 1.0120. That's the actual target. Now that makes it a 1 to 3. If that happens, now it's a little bit more dangerous because it still could move down and actually go after this 618 level, and that very much could happen. But some reasons why I don't think it would happen. One, it's already hit a 5-0 level. Two, you notice this level has been basically a area to where it's been kind of pivoting, and if it does go down to this level, I think that 9,900 will be able to hover just a little bit more to be able to give you some more upside. If you don't feel comfortable about 98.90, then you can go to 98.80 or 98.70 to make sure that you're a little bit more out the game. So I would say go down to 98.70 if you're going to end up doing that as a actual stop, just to keep it out the way. And from there, say that you're going out to 175. If we can get a lower price, if we can get it to be able to go down to 98.80 before actually end up breaking a counter trend line toward the upside, then place it towards 98.70, and then after that go up to that target and then actually trade up from there. Sunday will actually end up telling you about how the market is going to end up moving. So hypothetically, if it does do this and it does touch this, look for the U-turn, buy it on the U-turn, and then after that go from there. Right now, it's not in play on the 2 hour chart. So that's another good move. I do expect that we could be able to take that one. I'm going to actually place a timestamp on this one. So if I do take this trade, you'll understand why it's not 12:27, 10:27, and you'll understand why I end up taking this trade. And we'll talk about it next week once we end up going from there. So, and also this will be up on TradingView if you're not. If you're a part of the TradingView community. All right, so that's that one. I see United States dollar, and how are we looking on time? We're at 33 minutes. I want to make sure that I get through this in 40 minutes or less, so I'm going to move a little bit quicker. So right now, going off of the monthly chart, looking at where we're at, kind of like the same things. Market has been bearish. Market has been moving down, which means that the United States dollar has been in control. The target in general, 6,500. What has been happening since then, the market has been basically making waves. From them actual waves, it has been going up. Now, it rejected off of 68.75, which is this blue line. This blue line is a huge monthly pivot level, and typically once it ends up breaking a monthly pivot level towards the downside, it turns that support into a new resistance. If it turns into a new resistance and it does push it down, then I do expect that the market is going to go to 6,500 before anything else. Now, I have other targets that actually end up being a little bit shorter than that. On my automations, it has me getting out at 6,800. On some of them, it has me getting down at 6,700 on the other one. So I kind of understand why they're doing that. because this is not necessarily the fastest mover, I'm not going to stay into it at 6,500 on just one smooth move. All right, so me personally, I'm still thinking bearish to 6,500. Now, I do believe that there could be some upside movement, but that upside movement will have to happen when this happens right here. We have a trend line, and once this trend line is broken towards the upside, then the bearish movement is gone, the bullish movement will start, and then after that, we'll start to retrace back up. So until that happens, I'm still thinking more towards the US dollar's favor. Now, what ended up happening from here was that the market ended up moving into a high price level. And if you look at it on Sunday, we end up saying, hey, on last Sunday, we ended up saying if it breaks past this level and it retests this 68, 76 line again, then we should look for a sale. I end up taking a sale. We're actually up at this point right now. I'm up at this point 37 pips on one. And the other automations, I'm up. I'm actually up 50 pips on one, and another one is 37 pips again. So during that movement, we end up saying we wanted to be able to see if it's going to test this level again, because it is a monthly level, which means that it's going to hover there. Now, if you look at it, what happened was it actually ended up creating a double top, which means that the market ended up moving right here, wasn't able to reject it, and then push back down. Bulls able to push it back up, wasn't able to test it and break it again, reject it back down. Now the market is going to end up moving down to a 618 level. The 618 level is basically at 6,500 right here. So I do expect that it's going to end up being more downside movement. How strong is the downside movement going to end up being? Well, it's going to be determined based off of the figures and everything else that's going to end up coming out from the Australian dollar and United States dollar at the end of the month. If there was no impeachment talks or anything else like that, I think this would probably end up having a huge move to the downside, especially early throughout the week, because the Australian dollar figures wasn't very good last week. But because of that, I do think that it's going to end up being more stagnant. Now, if it gets to 66.80 and it hits that push zone, then it's gonna push very quickly. And I think it's moving towards that zone because this was the 5-0 and it's starting to move down towards that level. So at least to the below, it's going to end up being some actual movement. It may end up being stagnant, but it will be some actual movement. From there, I think it's going to end up pushing harder to be able to track that 6,500 line and go from there. Now, if you're not in, let's talk about what you could do. One, because this is still somewhat early inside of this actual movement, and it just broke the counter trend line a couple days ago. You can go to a lower time frame. From that lower time frame, you're looking for a high price up to be able to get into it. And if you look at where we're at right now at this particular point, we are at a high price on the 2-hour chart. I would say use this as a means of being able to get in, and then after that, go from there. Now, if you notice, right at 1 o'clock before the market ended up closing on Friday, that was your entry. Now, two things can happen. One, you can wait for it to be able to break below 68.17. If it breaks below 68.17, going this way. So let's say red line, bearish movement, right? Moves down. And after that, green line, bullish movement. It attracts and pushes back up early on Sunday. From there, use your counter trend line to be able to see where it's going to end up going from there, and then sell it on the backside of this movement based off of that. Now, that means that you have to be by your computer to be able to see that this happens like that. All right, that's the movement that you're kind of looking for if you want to be conservative. If you want to be aggressive and you want to say, let's figure out what's going to end up happening, look and see what happens on Sunday. Try to sell at market, but basically use the same rules. Let it go down, because I believe it's going to end up going down. It may end up gapping down. If it gaps down, it's probably going to gap down right around this level. It's probably going to end up gapping down right around this level and then push back up. As soon as it pushes back up, then after that, take your sell from there, especially if it stays below 68.17. Then after that, sell it off to the actual number that you're going for. Now, you want to go for a long-term target. The long-term target will end up being 6,500. And what that would do, it will give you a good equity management ratio, because we've known that the market has tried to push up towards 68.76 multiple times. So all you have to do is move your stop up to 6,900, which is essentially um, 87 pips away. So I'm gonna say stop will end up being 6,900. The target is gonna end up being, if you're gonna stay in this the whole time, the overall target will end up being 6,500, which will mean your risk reward ratio will be very high. All right, risk reward ratio will end up being from here to here. I say you get in from there, that's 317 pips, going after 85. All right, so easily a 1 to 3. And quite frankly, that's the trades that I would end up looking at more than anything else. Now, once again, let's talk about what's going on with the overall dollar and how the dollar is going to end up moving, and what's the strength of the United States dollar, because this move will be backed off of that move. Right now, we're in an oversold position, so we're just trying to get a high price. We want to get a high price, and then after that, sell it down. Once we end up doing that, I would say look at certain targets to be able to get in and get out. The first target that I would say, if you want to just get out and take your profit from there and be safe, let's place a horizontal line right here. The reason why I'm placing a horizontal line right here, because it's 3 pivots from there. So you're talking about 67.94. So 6,700 will be target 1. If we go and we look at any of the targets from before, okay, that gives us actually pretty good feel. If it breaks that level and actually ends up going there towards that level, then it's going to end up hitting 66.60. 66.60 was the extension on the 2 hours. So my second move will end up being, say, hey, let's move down to 66.60 and stay in it from there. After it moves from 66.60, then stay in it to 6,500. So 3 targets, 3 levels of being able to get out. We'll say 66.95 is take profit 1. If you're not in, once again, this is for people that are not in. If you're in, and whatever your level is of being able to get out, stay in that and go from there. The reason why people are basically at 67.50 and 6,800 are basically right here, because there's another pivot level. But if you get into it with that level, then that means your risk reward would be off. So let's say hypothetically, if somebody was trying to get into it and basically get out right there, the risk reward will not be there. So that's the reason why I'm saying 66.95. But here, 66.60 would be take profit 2. And then after that, the overall target will end up being 6,500 with a stop below that level. So let's go ahead and place the shorts position up, and then after that, I kind of show you. So let's say hypothetically, we get in right here at this number, and we take this all the way down to 6,500. Let's spread this out just a little bit to this way, and spread this out a little bit towards this way. Stop will end up being at 6,900, which is basically 85 pips. And then after that, you have your targets from right there. So overall, if we're looking at all of the trades and just based off of where we're at, I actually like this one a little bit more for its risk reward ratio. I like the U.S. Swiss for being able to buy a little bit more, but I like this one for its risk reward ratio. Now, last one, let's go pound U.S. Pound U.S. I've been staying away from. The reason why I've been staying away from it is because of Brexit, and because they're not able to make up their mind about what they want to do. And simply put, I don't care if I get a buy signal or a sell signal or anything else like that. I don't want to make any move until I know what they want to do. But I do want to talk about it, so just so you can be able to see it. All right, bearish move down, went down to the 1.27. there's a full target, there's a downward target at 1.1830, which I think is going to end up being. There has been some monthly resistance at 1.22, in which the market ends up pushing back up. From there, it's going to end up pushing up to at least 1.32 before it actually ends up going there. The reason why I say that is because if you look at these resistance levels have been hit multiple times. So there's going to end up being some movement towards the downside, at least towards that level again, before I think that the market is going to end up pushing down anymore. So we're talking about at least another 400 pips of actual upside movement before it moves down. Now that upside movement will be based off of Brexit. If it does happen, then you're going to end up having that push up. And people are going to end up keep on pushing it up because they're so anxious of being able to be so early on the move on Brexit. And when it happens, if the bulls think that it's going to end up happening, then it's going to end up going to 1.32 and at least testing there before it does. So that's the monthly move. So if we're looking at it from an upside movement, I would say if I was to take any type of trade, the trade that I end up taking, if there's positive Brexit news, then I'll look at buying. If there's negative Brexit news, then I'll look at selling. But both of them are happening simultaneously. So me personally, not even interested. But with that being said, last week I ended up saying that if you were interested, look at a counter trend line break, and then after that, sell it from there. That counter trend line break ended up happening right here in this area. From there, this movement actually ended up going toward the downside. If you were to sell this, you probably would have sold it right here, which meant that you probably would have been up as much as 100 pips, and then after that was down 43 pips, and now you're probably at right around 96 pips for the actual movement. And you're looking at trying to buy. From this area, in which once again there was a huge bullish move. I would say look at trying to get in at 1.2680, which has been a pivot level, which would end up being past resistance turned future support. So two different things. One, if you're in this and you were selling and you're just selling the retracement, you have a little bit of movement more towards the downside until 1.2680. I would say get out at 1.27 just to be safe. You get out at 1.27, you've made your pips, you get out the way, and then after that, you look for any type of bullish type of movement. Once again, that comes with more news that is coming up. Now, I believe that the news is supposed to be coming up during Halloween, October 31st, before it's actual votes and everything else like that. Now, once that happens, what you're looking for more than anything else is a counter trend line toward the downside. Once it breaks this counter trend line going upwards, then after that you end up taking a buy. You take the buy to 1.32, and then after that you live with the results, which is stop below. I will place my stop below. Man, hold on. Let's see. Where would I place my stop below? That'll be a good question. Because this move was so big. Let's see. Here is the first movement. There goes your A to B to C to D. There goes your A to B right here. I wouldn't want to place my stop below this, but I want my stop to be below the 618. So I would probably place it at 1.2550. If I place my stop at 1.2550, which would be right here, then that means that I will be going after 600. I'll be going after, I'm sorry, let's try this over again. My entry will be right around here. So I'll be going after 500 pips, and my stop will end up being 100 and basically 50 pips off. So basically another 1 to 3. If I was to get in at that point, and that was the trade plan that I wanted to do. So once again, it's a good risk reward ratio. I'm going to write this up. Once again, I'm not personally getting into it. The reason why I'm not getting into it is a certain one. The news has been basically fickle the whole time. And if the news has been fickle to me about how it's going to end up moving, and if they're going to end up making the decision, and if they're going to separate, or if they're going to stay the same, or anything else like that, then um, unless you have an automation system that's going to end up reading that signal and then trading it without you having to look at the market as soon as it ends up happening, then me personally, I would say stay out of it. I would say get out the move. Don't even look at it. Don't even worry about it. And that's just my personal feeling, because with an automation system, it has no emotions. It goes based off of what your rules are. It goes based off of what the figures is. So me personally, I wouldn't even take it. Only reason why I wouldn't take it is because my emotions will probably be into this move, and I don't want to get into that. So that's it. I do want to talk about the. I did say I want to talk about the Swiss yen, and I did say that I want to talk about the Australian yen. And what I will end up doing is actually showing you this. So what you're looking at is all of the automation systems that we have here at Carter Cow Capital. And I'm very excited about it. Get this out the way. Very excited about all of the systems that we have going in. But let me tell you why I ended up taking a switch in trade. The system that you're looking right here is the FX Striker. This is FX Striker Ground. This is more of a swing trading system. This swing trading system basically uses the ADX, and it looks at the momentum between both of the bulls and the bears, and then after that, it uses moving averages to kind of get a direction. From that direction, it ends up taking sales and buys from that actual level. So what actually ended up happening was that we was basically in the sell zone. Once we end up getting that sell zone type of movement, we end up getting a good bearish push. From that bearish push, we actually end up taking that sell. From that sell and where we're at right now, currently we're up 37 pips. We're actually going after, based off of that, from this move, we're going after 194 pips, which is at 107.60, with the stop being above 100. Now, the best part about this is that the market is that this EA, once it ends up hitting towards a actual level, I believe on this one it's 50 pips, it automatically moves it to break even, and it automatically starts to trail it for you. So you don't have to worry about being able to manage this one and do everything else while this trade is actually going through, which is something that I'm very excited about, because me personally, I'm a school teacher. So there's really no way that I can be in front of be in front of my students and actually be teaching and be thinking about the actual pairs without having to look at it. And if I have to look at it, then that means that I'm not doing my best for my students. So if we go back to the Swiss yen and just take a look at the chart and take a look at that movement that you end up seeing, or that entry that you end up seeing, end up happening right here. End up breaking right at that point, which is basically right at that pivot. And the target is basically at 107.80, which means that if we end up going down, we're probably going to end up hitting 108 before it actually ends up going up. So it's somewhat accurate on that actual move. Now, while that's actually happening, the trail is actually moving the actual pair down while it's going on until it ends up hitting this level. So if it hits 108 and then after that it goes after the target of 107.80 and I end up getting all of it, then that's awesome. And the best thing about it is I did not move a finger on being able to make that move. It actually ended up moving towards the actual point. And based off of the way that it reads, then it's actually going towards that actual figure. If not, and it starts to reject back up, then it will actually end up taking a second entry off of it. So once again, this is more carefree. This is something that goes out to swing trades, that has a good risk reward ratio. Once the market starts moving in your favor, then it starts pushing everything down. So FX Striker is actually going to end up coming out at the beginning of the year. Very excited about it. It's kind of broken down into two different ones. You actually end up getting two different automations in one. You get a scalper and you get and swing trades at the same time. So it's two different packages built into one. Very excited about when it actually ends up coming out. But once again, just so I can make sure everybody understands, Planyourtradetv, we're actually going to end up going live on 4 o'clock again. a little bit later on. I've really been trying to make sure that I can be able to get everything set up with my automation systems and everything goes like that. So I do apologize for not being able to go through live and everything goes. So if you're following this video, I know it has been an hour, and some people can be patient like that. Some people will look at it and be like, it's an hour, so I'm going to get out of it. But make sure you follow me at my social media links: Facebook, Twitter, TradingView, Instagram, and everything else. CarterCowCapital.com. It's about to be finished, and it has all of the packages and everything else on there. We end up going through that. But everyone, y'all have a good one. Like always, plan your trade, trade your plan. Y'all end up having a great week.